Welcome back to Passing Notes with Chaz Guinn. I'm Hayes Brumbeloe, your host. It's good to have you back. Episode 5. Moving through them.
Clicking along.
It's a good time of the year.
It's the best time of the year.
It's
got
a good time.
every major sport on.
Yeah.
I mean, we were just talking about this. You got hockey, basketball just started.
Right.
Football's starting to hit mid-season.
You can literally turn the TV on and watch anything you want.
Oh, and you and I have been glued to Saturday football, college football.
Dude, Saturdays
Special.
are for the boys, right?
Oh, and we've got 2 boys, so
And
we
we've got
make
2
it
boys.
work. We
No,
make it
yeah.
work, man.
My 3-year-old gets into it. He likes football.
He's starting to sit right next to us.
Yeah, it's with T-ball, it's like don't mix the two. Don't tackle your teammate.
They're still trying to slide and make it make sense. I'm like, oh,
making dirt castles when they're not paying attention.
But I mean, spring and summer we don't get this sort of action,
No
right?
way.
To kind of break up our weekends, break up, just the hustle and bustle of life.
It's
right?
a good part of the year.
Oh,
it's
I love
a good
it.
part of the year. Well, let's jump in. So we're going to talk about notes. We're talking about real estate, all things real estate, rentals, all those things. But it's really it's driven down to the note. That's what makes this special. That's what makes this unique, and that's what the opportunity is all about. We've kind of had multiple episodes where they kind of build on each other. One of the things I wanted to talk about was from a geographical standpoint. Where are we seeing the most saturation for MPLs and foreclosures?
The simplest answer is the states with the highest and longest foreclosure timelines.
Yeah.
If it takes you as a lender or an owner of a note to get anywhere between 1 to 2 years to get the foreclosure process completed, right? The lender is typically not in this space of just keeping their money outstanding forever and not getting payment on it.
Right.
So usually we're starting to see a ton of saturation in markets that are in the Northeast, whether it's in Connecticut, Rhode Island, New York, New Jersey, Illinois, Pennsylvania, are very highly concentrated areas all through the Midwest and all through down in the Southeast. These locations are some of the longest foreclosure timelines in the country. And however, price it in. So we're pricing the longer foreclosure timelines into our model. And what it really comes down to is really understanding, we were just talking about sports, where are you as a percentage of completion from getting the real estate back?
Right.
So for example, are you at the 50-yard line with respect to foreclosure, or are you more like in the red zone closer to the 20-yard line?
That's where you want to be.
Big time. But that difference right there is it all comes back down to pricing, though, right? Certain lenders are going to discount the file far more if the file's at the 50-yard line.
Sure.
Versus the file being at the 20.
And that's not a deterrent for a buyer.
Not at all. Again, this goes back to, are you good at working with people or no? Okay, so if you're not, your servicer, you need to find a servicer who is then. Make sure your servicer builds rapport with these delinquent homeowners. Guys, there's real stories behind these people that are not paying their mortgage.
Right.
And that's why we always really get into what's the hardship, what caused the default. Because let's talk about it. Unless you're going to your traditional real estate agent and your broker and you're doing your open houses on the weekend, traditionally most people aren't buying all cash.
No way.
Right? Majority of people use a lender to get the mortgage. Let's say you put down your 20% cash, the lender gives you the other 80%, right?
Right.
But what happens when that other 80% stops getting paid on? 5 years in, 7 years into the payment structure, a divorce happened.
Right.
A hardship happened.
Death. Could be anything.
Death, cancer, disease, right? We talked about those 4 major hardship channels that cause this, right? However, the saturation that we're going back to your question, the saturation we're seeing in the Northeast is look at the flee from New York to Florida.
Right.
Right? Over the last 3-4 years because of COVID.
Yeah.
Right? And now you're seeing that the lenders were like, whoa, the borrower vacated, not making the payment, and foreclosure is going to last anywhere between 4 to 6 years in the state of New York. Lenders are trying to dump those sort of assets out into the market, right?
Sure.
So I hope that gives a little bit context.
Sure. But like we said, it's not a deterrent for a buyer. If you're a savvy buyer, you're going to see the opportunity.
So for us, we'll buy assets that we know are in the 20% of the foreclosure process at the very beginning.
Right.
Maybe it just got referred out to a local attorney. That for us is like you're in the dugout regarding foreclosure. It just has been referred, right? That means that there's still a journey behind that process to get it really through. However, if you can work something out between that delinquent homeowner, cash for keys, deed in lieu, these are strategies that have you avoid having your capital tied up for years on end. Work something out with the people. I went back to and said, are you good at working with people? Is your servicer good at working with people? Do you have any potential door knocking strategies you guys are employing? If all of those fail, we understand foreclosure is inevitable, right? The borrower doesn't want to work with you, don't pick up your calls, doesn't pick up your letters, doesn't want to have you talk to us about what's the story behind why you're not paying, right? But again, like you mentioned, it's factored in. It's not a deterrent, right? I'll still buy something that's at the 20% level because chances are of me being able to work it out before I get to the 100% are high. My probability of workout is high. So we factor it in, we price it in, and that's why we always come back to there's no bad houses or bad loans, just bad pricing.
Bad pricing. From a buyer standpoint, let's describe, because we have a lot of newcomers to this space. I can tell you when I first discovered the note space, the note buying space, there was no front door. There was no front door like, I'm coming in. Let's play ball. It's like a speakeasy. Like you got to know which shelf to push. You know what I mean? Just to get to the back bar.
Do I have to pull this book down? Is that how I get
know what
in?
I mean? There's no front door.
Nope. No password.
And when I'm discovering the space, trying to figure out, okay, there's a play here. And then I'm realizing there's no front door, so I've got to flip some rocks over. I flip a couple of rocks over. I find Chaz Guinn. And then I realize, wow, there's a huge opportunity here to bring a lot more people into the tent. I feel like I'm a perfect example of, okay, I want to know more. And I know I can guarantee that people watching this are like, I want to know more too. I want to see where's the front door. And I feel like that's exactly what Revolve Capital is creating. A big old giant front door for people to come right in, where it's not, okay, you've got education over here, because that's out there. You can get an education. But it's also like, where do I get the job? You know what I mean? And that's one of the things where Revolve Capital is unique, because you can get an education and you can get a job, and you can get I think you mentioned it in a couple of episodes. It's a business in a box.
Then we're adding resources, because now you're like, okay, I can get educated, I can get product, but now I don't have any real systems,
right?
So that my investments are turning over, and then turning over, and then they're getting faster. And that rinse and repeat model, it gets more efficient.
Exactly.
So you need sourcing, you need vendors, you need movers and shakers, you need the right attorneys, you need doc prep, you need AOMs to be properly recorded, right? You need to be able to have and implore strategies that get you as a buyer or a lender, an investor, to get to what's happening with the homeowner if you're trying to get a resolve to happen.
Right.
These are all resources that we're also packaging with the education and the supply to say, we want to see you grow the business.
Exactly.
Because look, there's no hidden truth. If they do well, we do well.
100%.
And we know that if we can get them properly underwriting, properly raising capital, properly putting monies into this space with a rinse and repeat mindset, we're all going to grow. We're all going to do 10x the volume we planned to do when we first started our relationship out.
Exactly.
You hit it on something huge, and that was the problem is we're trying to create a front door. 15 years ago, this space was not even there. Right? The only way you got one-offs is because you had this institutional relationship with the big box lender.
Sure.
There was no one-off selling of notes.
Sure.
There was no small carves or portfolio selling in 2001, 2, and 3.
Sure.
Yeah, there was a capital markets, but it wasn't this market on the main stage.
Right.
So we're really in the wild, wild west, so to speak, trying to create this business to say, look, what Amazon is doing regarding ordering something from your smartphone that arrives to your door either later that night or the very next morning.
Say by noon.
It's silly. Look at the logistics that those guys have put in.
Right.
But that space wasn't there 25 years ago,
No
30
way.
years ago.
No way.
So look at what they've done to revolutionize how you interact and how you purchase consumer goods.
Sure.
We are trying to revolutionize how you invest and buy real estate.
100%.
A lot of things we say is real estate investing reimagined.
Reimagined.
I know it sounds, oh God, that was cliche. That was no, but it's doing it different.
Sure.
You and I were talking just the other week ago where the average home was not bought online until 2012.
Correct.
Right? People weren't using video. People weren't using drones to fly through a house to give somebody across the country or across the world.
People are selling homes on Instagram.
Look at this now. I mean, that wasn't happening on Facebook, MySpace, right? Yeah. So these platforms now have become tools where you're revolutionizing how money's coming into a market space. Sure. So we are looking to create that big front door to say, come on in,
right.
Learn something really cool. But beyond all the coolness, you can do this from the comfort of your house, right? You could do this from a comfort of being abroad, traveling with your family.
Absolutely.
I think that I've been working far more over the last few years just because I've been at home, right?
Sure.
We just opened our brick and mortar here in Texas. We also have one in California. But I just miss being around people, Hayes.
Sure.
That was my calling, right? Is to interact with human beings. Yeah. And I'm not a perfect stay-at-home person because I love the interaction,
sure.
But this is a business where a lot of our folks are working from home, right?
For
and this is why we're saying, hey, there's a big front door to come in.
Yeah.
Get a little bit of education before you jump in, but grow the relationship.
And I think that's where Revolve is there's so much value there because it's taking pieces that are kind of floating out on different islands and then bringing it all back to one location. You know, the education, all the pieces, the supply and everything. It's like, yeah, it's as cliche as it sounds, is you get the education and the job. And I think, that's what Revolve is doing, is creating that big front door for people to say, you know what, I'm in on this.
Look at the student loan problem that we were talking about, right? That's like a $1 trillion+ market,
I think
right?
it's bigger than that.
Was the government now getting in to do debt forgiveness? So you got a job, you got your degree,
right.
And then you went out into the job market in rut-row,
yeah,
right? And not only was the job market, even if the job market was there for you, the pay that
right.
you kind of associated with your degree level was not matching up either, right? So you're like, wait a second.
Salary growth isn't following inflation.
So we want to say, look, come get your degree,
yeah.
And then here's the product flow,
right.
Here's the resources, and here's your business in a box.
And that's that toolkit we were talking about. I mean, giving the resources, it doesn't make sense to bring somebody in the front door, and then all of a sudden they're like, yeah, let's go, I'm in. And they're like, wait a minute, now what do I do? And that's the difference that we're taking with Revolve Capital is giving those tools and explaining how to use them, giving the education, and along the way, it's like a mechanic. You know what I mean? He's going to learn how to do his craft, but then there's tools he has to know how to use to become the best, to perfect his craft. Then all of a sudden he's in business, and he could do it with his eyes closed. That's exactly kind of, I think, the barrier. Because when I went out searching, I was looking for that front door, and it's like, I'm decently smart guy. I can figure this out. You know what I mean? And I think most people can. And I think that big barrier is being just absolutely knocked down from your, leadership with Revolve Capital and where you're looking to take, the opportunity and match it with a big giant tent for a lot of buyers to get in the space because the opportunity is just too good. It's just too good.
I think you said something special there that we see a lot. It's called paralysis by analysis.
Sure.
Right?
Yeah.
So you're stoked. You can't wait to get into the space. You've raised a little bit of capital, or maybe you have some good savings that you want to start going. You're like, wait a second. I don't have a model.
Right.
Okay. I don't have a proper way what type of modification would I give to this homeowner? What rate would I give them? What maturity would I give them? What terms would I offer? Right. And what about a deal book? Meaning, so I get offers from my portfolio. I want to start selling and revolving my assets in my portfolio, but I don't have a real pricing tool to sell. Right. We're giving these resources to our members,
right.
And these folks are legitimately saying, look, you're teaching me, you're sourcing me, you're giving me actual tools to build the house.
How to use those tools?
Correct. and we know that there's other sellers in this market. We know that there's other folks that also offer notes to the community,
right.
But you're not getting all of these resources at once
in one place.
No, it's fractionalized, right? Here's the product, you go run the diligence,
right?
Okay,
right.
And that's standard, that's market, right? For us, and we say, look, but how are you getting that person, right, to truly invest soundly, if they don't see all the potential blind spots and all the risks that come involved. There's absolute risks in this business and notes, right? But it should be uncovered in a lot of your diligence, right? A lot of the inefficiencies that we're seeing in the market today is missing collateral documentation. These notes have been changed with so many different hands.
We were talking about this yesterday.
They transferred so many different servicers, and these guys are losing the docs left and right. Right? And these are why loans or notes fall out of securitizations that trade like bonds. Okay? The reason why these assets are falling out is because when it goes from bank 1 to bank 2, but within that transfer, Bank 1 lost 25% of the documents due to the transfer of FedEx. Could be that simple, right? Maybe the TILA, the Truth in Lending Act, didn't come with it. Maybe the HUD got misplaced. Maybe the 1003 application that you filled out didn't get made into the file. All of these big issues get to kick the file now from the securitization, and that comes right to us, right? We're currently not securitizing our product, so I'm not too concerned about the 1003 from 2008.
You're right.
I'm concerned about the 1003 from 2022.
Right.
What's going on with you and your husband right now? Walk me through that. Walk me through the income, right? All conversations our servicer has with these homeowners, right? But the inefficiencies of the documentation, going back to that point, is shown in your due diligence. The seller, we are a large seller, we show you all the documentation up front. We'll even ship you the documents via a Bailey letter. So your custodian or whoever does your verification process can do that pre-purchase. You should see everything before you make the investment. A lot of sellers don't offer these services. We know that there's other sellers, but this is why we're saying it's all in one place. We're trying to streamline this.
That's the front door. Big front door. And I love it. One of the things I wanted to kind of talk about was how do you... there's obviously newcomers to the podcast. They're discovering this space. Can you describe what the ideal buyer is, or the mentality, the strategy? Because they're sitting here watching this, and they're like, I can do this. Let's talk about the proper strategy for someone who's like, all right, I want in. How should they be thinking? What should their strategy be?
You got to like real estate. Let's start there. I don't think this is a young or an old. I don't think this is a rich or not rich discussion, because we've seen folks that have come in with $50,000 a year, right? And now they've turned this into a full-blown career because they had resources readily available to them. Maybe they didn't have their own personal income, but they could use other people's money to be able to properly invest,
or they could move around 401k or crypto or things like that. So you have some other channels you can tap into.
It's not a rich or a not rich thing, right? And I think it comes from, are you a student? Like, I'm a student of life. I believe that I remain coachable. I read a ton of books. I'm folks that are listening that also do the same thing. If you have a thirst, or your knowledge base is always itching for more, chances are you're going to love what we're putting out there. And that's the typical note buyer that we're looking for. It's a guy or a gal that says, I know how to run processes. I know how to run systems. I'm pretty systematic on how I approach things. I like to have checklists. I like to trust but verify. But I also love real estate. Whether it's your popular television show on HGTV, whether you like to go to open houses, look at model homes. If you like real estate, then you're going to like what we're doing in the note buying space. Okay, so your guy or gal out there that likes real estate, has a thirst for education, wants to have some good resourcing before they actually pull the trigger. Our subscription model allows for folks to really tap into learning a lot about this business before you have to get in. Right? We provide toolkits as a part of our membership. We give you the business before you have to invest into the business. I'm just going to be very direct with you. There's nobody else out there doing that. Okay, so we welcome you to come in and say, look, here's the tools needed to scale and to do this legitimately in scale. But yet it goes back to, do you like learning?
Yes.
Because this business is so fluid. Hayes, what I'm doing today, I wasn't doing 2 years ago. What I was doing 2 years ago, I wasn't doing 5 years ago. Right? The business is constantly changing. The 30-year was almost around 3% earlier this year, and now we're sitting at 7.5%, close to.
Right.
So look how fluid that market changed inside of a year, right? So you constantly have to be educating. You're seeing these moratoriums put in place. We hadn't seen those since 2010.
Right.
When Obama's administration put the moratoriums in place on foreclosures. Okay.
Right.
So, but are you learning? Do you know the difference between New York and California? Right? Do you know the difference between Wyoming and Texas? Right? When it comes to getting through the real estate, all stuff that we're teaching here at Revolve.
I love it. And it goes back to, the typical investor, the buyer. It's different now. We talked about the freedom to be able to travel and do those things. I think that COVID fed that monster big time. Because all of a sudden people are working from home, they're doing these things, they're realizing, okay, all I need is my laptop. I'm a lot more productive. Now they're finding opportunities like this. We're like, I can travel again. The freedom is there, but I can also make more money than I've ever made before in my life.
Look, man, I can't tell you how many Uber drivers have been starting to try and buy notes. I mean,
well, you are like the super introverted guy who, it's like pulling teeth to get you to talk.
Right,
No, I love it. I think people are discovering this, and I think it's a huge opportunity for. I won't. It's not a young or an old thing. It's a freedom thing.
It's a freedom thing.
It's a freedom thing because I feel like building financial wealth is a freedom thing. Because if you're motivated enough and organized, to your point, you can make this work. I promise. It's not hard.
I'm sure some of our viewers have been in the commercial space.
Sure.
Okay?
Oh yeah, sure.
When we were talking about this just a few days ago, right? We were talking about what's going to happen in the commercial market. Right, we're seeing buildings after building throughout the country that are still left vacant and empty, or occupancy is at an all-time low.
Right,
going back to the workplace is not normalized yet.
Sure,
right. Travel even at airports is not normalized yet.
Sure.
So you're starting to see. Look at the Zoom stocks over the last few years. They've been on a tear because folks that typically travel from Texas to China, right, are saying we can do the exact same meeting we could do virtually.
Sure.
Right? Look at Oculus going through the roof doing these virtual meetings. So this has all kind of been a downturn on the commercial space.
Sure.
Us resi guys
we've heard about that.
There's correlation, right? Typically if you're not making your commercial payment, you stop making your mortgage payment, right? And vice versa, right? So we've seen that the ability for a flood or a wave of folks going back into the office still not there, man.
Yeah.
Right. So folks still being able to learn a career. That's why I was joking about the Uber guys, but I'm kind of not, because a lot of guys are looking for diversity.
Sure.
They were saying, look, I can start driving a car and do this for fun. Right. But also, look, I've got $500,000 just sitting in my 401k doing nada.
Right.
Right. How can I start putting that into the market with you guys? And I'm saying, hop on, check us out. Right. So this is where we are kind of breeding this new wave, this new younger, older, not rich.
It's a huge opportunity.
U.S., non-U.S., right? It's all these different kind of market sets that we're seeing as, whoa, this person, this type of gal or guy was not in the space 10 years ago.
Sure. Maybe not 5 years ago.
Not even 5 years ago. Right. So this is why I think that your traditional person doesn't even have a demographic anymore, right? What we've seen, we're excited to see as many females come into the space. And we've noticed, I'll tell you, a lot of any females that are really in this space, that take this space truly serious and are trying to grow scale, become absolute alphas. Right? They start running shops because they're so systematic and their approach was systematic. Right. And they are more of a verification person than trust person, right? The I's and the T's better cross, and we're starting to welcome. We want to see so many more females come into the space because they're starting to take over, and it's exciting to see.
See, these conversations get me buzzing. I get excited. I'm sure you guys are getting excited too, but that's the beauty of this podcast. I mean, the whole point of this podcast is to truly bring as many people into this tent as possible. I mean, it's not only creating the front door, but it's kicking it in. Just kick the door in and let's go.
Amen.
That's all the time we have, man. These things go by so quick. Thank you guys for stopping by. Make sure you like, you share. copy the links, send it to your friends, family, everybody. Let's get this door kicked in. More people hearing about this. Make sure you go to revolve-capital.com. Become a member. Come join the party. We're having a good time. We'd love to have you guys. But thanks for stopping by, and we will see you next time. Cheers.